a lot of people talk about how, with the vaccine news, they've been selling growth up until recently, at least selling the growth stocks, moving back into cyclicals and value. But we maybe should distinguish between cyclicals and value. So help us do that, Rebecca. What are you looking into?
Yes, so I think there are reasons why people have gone back to value. It underperformed for a very long time. In fact, it's been underperforming for 10 years, and very much that went into extreme over the last 4 years. But if we think, since we've had two things, so one, the certainty over the election, and the result almost came out as a perfect scenario for the market, and then we've had the very positive vaccine news, then that has acted as a game changer. And we've seen in November, we've seen areas like financials and energy really rally strong. And the other reason behind that is investors have been very underweight that area. So they've been adding to their holdings. But if we look forward, for value to work strongly for that rotation to be sustainable, we really need to see inflation. And yet, if you think what the ECB was saying yesterday, inflation's disappeared. Yes, there may be some constraints in the supply chain which could make individual pricing go up, but actually what we have seen is a large basket of goods that the prices have gone down. And we think long-term, technology, demographic change, that acts to bring inflation down. So in that scenario, why not focus just on the cyclical recovery, find that exposure to the cyclical recovery, look more towards areas like industrials rather than just relying on that value rotation.
OK, and talking about industrials, in a place where you might get some inflation and you might get some growth as well, I was looking at Chinese industrial profits, Rebecca, just out overnight, surging 28% year on year in the month of October after a decent number higher in September as well. This just goes to underline, I suppose, the way that China is managing to rebound. Is that investable for you at this point? Are you thinking about more exposure to China because of the way it is ahead of the curve, really, on the pandemic?
Certainly. So if we think about the path we've had with emerging markets this year in general and China, there was one period where people did not want to go close to those markets, and that's when we had the very difficult markets in March and April. But ever since then, we've seen the Chinese economy recover well ahead of everywhere else, and I think it still does make that an opportunity for people, not just China, because what's been very interesting, and I think actually the news went under the radar, was the RCEP, so the Asian trade deal that we saw struck 2 weeks ago, because that came at the same time as the vaccine news and much election news. We ignored the fact that we've had this very, very strong trade deal which connects China with other parts of that area, so Japan, South Korea, Australia, New Zealand, so making a very, very strong partnership. So I think there's a very good story there.